One of the top questions we get as mortgage brokers is this: is a HELOC a smart move in this current environment? It's a fair question. Give us 10 minutes and we'll break down when a HELOC makes sense, when it doesn't, and stick around to the end because there's a simple 5-step checklist to help you decide for yourself. Welcome to the channel. We are the Clear Close, the mortgage experts to help you get clear to close on your next mortgage. But before we move on, a bunch of you who've scheduled calls with us are asking for courses of all things. You guys want to learn more, which is awesome. If this is something that you guys really want, we are willing to put the effort in and to build a course for you guys. If that's what you guys really want, I want you guys to put a thumbs up emoji in the comments. Let's get into the video. Jason, what is a HELOC and why do people even get them?
Why?
So basically, HELOC is a home equity line of credit. It's an open-ended agreement with the lender to have access to your credit or access to your home equity with the credit line. And it lets you use that equity for building a business, debt consolidation, everything that you could be doing with a cash out refinance without redoing your first mortgage.
Let's get into the meat and potatoes of the episode. We're going to do a checklist if you're ready and if it makes sense for you. All right, so let's get into number one.
You have to have income that we can verify to qualify you, right? Or it also can work because you don't have stable income, but you have a lot of documented income that can qualify you. And you're a very seasonal business where you have tight cash flow certain periods of the year and flush with cash other parts of the year. And then the down parts of the year, you're relying heavily on credit cards to carry you over. It makes a lot of sense. I see landscaping companies, or say, for example, like I had a customer that's a contractor for utility companies in the Midwest, right? So for him, his operational overhead is very high, 7-figure. But it's seasonal in the fact that the ground is frozen over. So you can't put power lines in or telecommunication lines in from winter to spring. That's his slow season, but he keeps everybody on payroll. So for him, having a HELOC is huge because now it's a cash flow thing. And then you have the flip side of not stable income because of a job choice that you have, but there's no guarantee that your hours are going to be regular enough to recover. Does this make sense for you to get a HELOC? Because like, what is my ability to repay it? And it circles down to, do you have a plan? Which is one of the points that are coming up, right? How are you going to repay this HELOC?
Second point is you have a lot of equity or you have enough equity in your home in order to draw from. This is one of the requirements or like the minimum qualifications. The term that we use is LTV, right? Loan to value.
Yeah, combined loan to value. There's state restrictions in parts of the country where you're not allowed to borrow more than a total of 80% combined loan to value, like in Texas. But then there's also other states where they're like, you can borrow up to 85 or 90%.
Does it even make sense for me to have a HELOC if I have only 10% of equity in the house?
Do you have enough equity available, right? Because do you just buy your house like a year ago with 5% down? First time home buyer, 3% down on a conventional, or 3.5% with the FHA loan? You're in early stage of home ownership. So you're going to have to wait for the market to appreciate, or you're going to pay down a good chunk of your current loan to qualify. So you're going to want to know, like, what's my realistic home value and what do I owe on it? Do I have at least like 20, 25% equity left after qualifying for a HELOC? Yeah, then this is probably a good option for you to look into.
Can we touch up on that point a little bit? You said if the home value appreciates, how would that affect someone's ability to qualify for a HELOC if their amount of payment has not really, changed much?
Yeah, so I mean, homes will appreciate depending on the market, right? And depending on what your cost basis was when you acquired the home. So like, even if I have seen people that do like 5% down, 10% down in a good market or a good opportunity. And then all of a sudden, like 3 years later, the home appreciated a lot because it was slightly undervalued. Like one of the homes that I've seen people buy in our area a couple years ago, like bought in like 2022 for 10% down. But it was a seller that sold a home that needed a little bit of work. So then the person bought it as a primary home, did a little bit of renovations to it, touched it up, bought it slightly under market where they had equity on top of what they purchased it for. And then that appreciated value went up. So now they're only in the house for like $80,000 down payment. But now the home's worth like 1.1, 1.2. Now they have a lot of equity. Does that make sense? Because they bought it for like 825,000.
So yeah, the lender is going to look at the appreciated amount as part of your equity. Because if you were to sell the house, you would get that as basically a profit.
So it's two factors. You have to see appreciation and loan balance payoff to get a HELOC if you did a very little down payment recently.
Got
Like
it.
I see people inquiring and asking for a HELOC and they did a 3% down payment like 6 months ago.
Mm-hmm.
Unfortunately, unless your home value is significantly higher, right, than what you bought it for 6 months ago, and your loan, that spread loan to value, you don't have enough equity yet. You need the equity cushion gets built up over time through your repayment of the mortgage debt or your home appreciating or a combination of both at the same time. So a lot of people
Got
that
it.
are able to get a HELOC have been in the home for more than 5 years and they put a very healthy down payment. And they're on the good side of the net worth where the home values have increased so much over the last 20 years, 15 years, 30 years, that they have a loan that's very small in relation to home value. So they have the ability. So that equity cushion concept, it's more of like, did you build up enough over time? And that's the
Got
crazy
it.
thing about real estate. It's like as more time passes, it just grows and grows and grows. Even at 3% a year, give it 30 years. Like how many times over was that growth versus your purchase price, you know?
Mm-hmm.
A long game.
If someone says, I have no idea about what a HELOC is, how to pay it back, when to pay it back, how I draw the money, is that a red flag for you? Or how would you approach this?
It's not a red flag. It's a learning experience. So they shouldn't be jumping into getting a HELOC right away, in my opinion. They need to figure out how HELOCs work first.
Yeah. And overarchingly, if you are uneducated,
What did he say?
please don't take offense to this. Most of us are uneducated about mortgages until we start actually getting educated. I think all of us don't know anything until we start learning, right? So yeah, if you
I'm
don't
still
know
learning
anything
every
about
day.
right,
So
right,
it's
I'm
like,
still learning. I'm literally learning right now. um, if you don't know about HELOCs, don't worry. This channel is for people like you. If you want to schedule a call to learn, we are definitely here for you to educate you, to help you make the best decision for your best interest. All right. So let's move on to number 4. You have a clear purpose for the money that you will be borrowing. And we've talked about this like ad nauseum in almost every video we talk about when we talk about HELOCs. It's not free money. Definitely, if you
definitely not.
don't know what you're going to do with this money, don't check this box. It's you're not ready, right?
Yeah. Like as important as the first 3 parts of this were, like these next 2 points, I can't emphasize it enough. Like you have to know what you're doing. What is the purpose? You don't have a clear purpose for this HELOC, you shouldn't get one. It should be so like clear night and day. Renovating your house, right? Is it a tool to build wealth? Are you paying off high interest rate debt? Are you funding investments? And are you expecting to get a return on it? You have to have that clear purpose.
Clear eyes, full hearts, get loose.
The last item on this checklist is you've got a repayment plan from day one. If you are getting into a HELOC, or if you want to get into a HELOC and you have 1 through 4 checked off and you say, hey, I don't know how I'm going to pay this back, and I don't want to sell my house at the end of it. Like, Jason, what is your recommendation to this person?
So all you need to do is just follow the like payment schedule depending on the HELOC that you qualify for, and just as long as it's a fixed rate HELOC and you make every scheduled payment according to what's due, it will pay itself off to zero. With the variable rate HELOC that's interest only, you're responsible for making that repayment towards principal. Otherwise, if you don't, you're going to be hit with that.
The price shock, right?
Yeah, the price shock.
And there's also ways for people to get out of a HELOC or to repay a HELOC without having to pay the monthly payments, right? And I guess we can go into more detail into that aspect in a different video.
Yeah, just sell your house and you don't have any monthly payment. Or pay extra towards principal. It's called accelerating the payoff. So it's like if it's a 30-year HELOC, it might just take, as an example, $100,000 HELOC at 8%. Just pay an extra $200 a month. That'll save you 10 years. You'll finish it in 20 years instead of 30 if you pay that extra principal payment. Again, this applies to like a fully fixed rate HELOC like our program. If you're doing an interest only, you're responsible for principal. That's your duty as a homeowner to pay off your debts, right? That's not a safeguard built into those types of HELOCs.
So let's recap, everyone. This is a checklist. If you are on the fence about getting a HELOC or applying for a HELOC, and you've checked off yes to all 5 of these, then a HELOC might be a good option for you. Definitely click that link in the description or in the show notes to schedule a one-on-one call with our team, and we will go more in depth into your personal situation and see if you qualify for a HELOC, what rate you qualify for.
Like here's the thing. Most loan officers, they're gonna let it slide with just like the first 3 boxes out of these 5 checked, but for me, Peter, Nikki, like I literally can't sleep at night if I know that we haven't covered all 5 points, especially the last 2, if you couldn't tell. So it's like that's the difference between getting a loan, right? Versus getting a loan through the Clear Close, which is us. Like, please use the link in the show notes, the descriptions to book a call with us. Let's really make sure your strategy holds up. Okay.
Thanks for watching all the way through the end. Please subscribe if you haven't already, and share the video with someone you think is on the fence about getting a HELOC. Maybe this will help convince them to do it or not to do it if it's not a good idea for them. We're the Clear Close, the mortgage experts that help you get clear to close on your next mortgage, and we'll see you guys on the next one. And given all the recent talk about rate drops, there's a lot of people asking us which is better, a variable interest or fixed rate HELOC. If you want to learn more, we just did a video explaining which is the superior HELOC. You can click the link on the top of the screen, or if you want to learn more about how to avoid the most common mistakes people make with their HELOCs, click on the bottom video.